Hey everyone, welcome. I want to show you a couple things today on how I trade Euro USD. This is an Forex equity. I'm going to show you a couple things first before we get started. First, I want to show you the bull flag that was identified. This was identified Tuesday afternoon while I was doing levels. We had one touch, two, and a third right here on the support. So after three touches, you can start to look for a bull flag developing. It was verified with this one more bar that wicked through. So I was looking for some sort of bounce here at the bottom of the bull flag, which we did get. We can get into that later. This is a 2 hour chart. I'm going to show you how I trade and kind of what I'm looking for. First thing first, there were some lows that had been identified since these days mark. So this one was February 13th. This one was February 19th. So since I set this low, or since this bounced from this area, I was looking for a price to eventually test it and produce a quality setup. So just want to show you those two as we get into the action closer to a 15-minute chart now. I'm going to set this up so it's a little cleaner, but essentially I usually do my charts around 4 to 5:30 during the weekdays as equities are closing and the futures market closes for an hour. So if that's Thursday, so around this time, 4 o'clock ish, I start and I usually finish by like 5:30. So right below where price closed was that bull flag that was mentioned earlier, and lo and behold, it touched to the tick of that bull flag and bounced. The low of this candle was about 389. The high of this candle, which also happened to exactly bounce off of that major level above, white being major zones, orange being minor, was 400. So you're looking at about 11-point bounce. That was definitely takeable. You could probably just take the direct tag. Right as soon as it tags it and bounces about 2-3 points because of the high variability of that working out due to the flag definitely being developed. Um, with that said, after this happened, which I did grab for a couple points, I took the long. I missed it right off of it, so I took it around this minor level, which was around 392. I sold, waited for this major level to touch around 399, so 7 points. I took a position of about 50,000 pips, which is about $5 a point. Sold 40,000 of that, 80%, and kept 20% runner with my stop loss around right here. We happened not to touch it there. Went back through. The minor levels are usually profit taking levels, so I took another 10,000, another 5,000 off my remaining 10,000 open, and had a 5,000 point runner, which is really just 50 cents, not much, but that worked out pretty well until it sold off a little bit later around 8:45. That is more of a back test as well as a direct long type of long. It's not exactly the one I'm looking for most of the time. I'm looking more for failed breakdowns or volatility grabs. I want to just jump back real quick to the 2 hour to show you what I mean. So I'm looking for a major low like this or a major low like that to get undercut like you see over here later. That happened on Friday, and to start going above this low. So if this low is about 373, and ideally I'm looking for more something like closer to the action, but sometimes the low can be from farther away. So again, this is 373 about. So because it's so far away and it was a pretty big bounce that produced, I'm looking to get long about 5 to 7 points above that. So about 78. It's generally a good number. It's just 5 points above the previous low. So if I put a green trigger there, just so I know like when it loses that low, I can go long above it. So I'm going to come back to that later. But now going back to the 15-minute to see what we're working with. So like I said, we had a direct bounce off the bull flag, produced a nice 11-point bounce, come back down, should not have hit your stop loss of the remaining position. If you put your stop loss at break even, if you put your stop loss at below this level, then you definitely did not lose it. And then you got another bounce of 393 to 403, 404 from another 10 point bounce right there. You take a small profit level here and leave a runner, and then hope that you get another setup to add to, or that runner gets what's it called, trailed out, and you get a new position to enter. So after that happened overnight, you can see that this bull flag was definitely a important position. We were consolidating below, kind of accepting it. No failed breakdown was produced where there was a low that got undercut in this area, but you can see that the price is definitely accepting the zone. It's trying to come up, selling off, coming up, selling off, coming up, selling off, without losing the first low. So it's definitely a strong level. You want to wait for some type of volatility and a nice push through to potentially go long. That eventually did happen here at 2:30. However, obviously I was sleeping, and it went from this zone of 387, 390 back up to the zone we were talking about earlier. So a nice almost 13-point push off of that zone, where it went up again, and then it was consolidating around this zone that we were fighting with earlier. Now, I woke up around 6 o'clock, 6:30, and I was seeing the price was right below. I was seeing right away, I saw this bull flag action. So if you see it's flagging, I can draw something to kind of show you, but realistically, this is something you just start seeing. It's pretty much where price goes up and kind of just like consolidates sideways and down, and that's usually price just creating some energy to go up. So you see here we had the flagpole going up and then just kind of consolidating before eventually taking off. Like that's a classic chart pattern right there. So just want to show you that. But also, if you're trying to see it physically, I can draw it for you here. It's not an exact, but just assuming like price was going, you could see that it's clearly flagging, as so to speak. So you can go long. A lot of people would wait to go long up here, but we already identified this level here. We had a bounce Thursday afternoon. We came back, we tried to go over and reclaim that level, did not work, sold off. Now we're back here consolidating. This is very bullish to me. So when I'm waking up at 6:30, I'm thinking I want to see the price go through this level with some vigor, with some volatility. That's exactly what we got around 7, which is a really classic time for action to happen, somewhere around 6:30 to 8 a.m. in the morning. So I went long about 1.5 points above the top of this level. So 400 was a level, so around 401 I went long. I'm gonna just mark that with the green one so you can see. It's not an exact one. You're not gonna get exact every time. My stop loss for that, because I really like the setup and I did not have a long way down, was 380. So you're looking at almost 20 points. That's really around the max of what type of stop loss you would want to have. With my targets being this first major level up because of this quality of this consolidation. When you're seeing such up and down movement around that area, you're looking for a decent move up. You can take the chance to try to catch at least 7-8 points and sell 70-80% of your position there. So obviously afterwards you're seeing that it went right through. We actually got no drawback. Sometimes you'll get a drawback. If you entered here at like 5:30, which was still a decent entry, you would have possibly been down like 6 points on your entry, but never stopped out, even if your stop loss was a little bit riskier, like, and below this level low at 515. So going back, this is the trigger. You want to sell, at least you want to get about 6-7 points if you have a quality setup and you believe that you should move up decently, and that's exactly what it did. I sold most of my position here, held on to the rest, and then we kind of sold back. We kind of consolidated a little bit, again kind of flagging. You can see the remnants of a flag. So when we came back, many times price will come back to the trigger you entered, because this is how big money trades. and you see a bounce right off that. I saw the bounce. I saw it's going up pretty fast, so I added back a little more position halfway through. My price point of the entry was now close to here, so I moved my stop loss up from here all the way up to this area, hoping that the small increase in position again will work out, which it did. I sold back when we got here, half of the position I had left, kept a little more. It was a small position left now, but that did not work out as I was hoping to get to the next major level up. We eventually sold back down, and my position was barely survived, so I got lucky with that. But when it survived and came back up, I did not take any profits. I just kept that little small runner until it got taken out here around 12 o'clock. At which point we bounced again. There was the failed breakdown, potentially volatility grab of this overnight low at 5:15 and this 10 o'clock, 10:45 low. But because I already made a good trade and I didn't like the way the action was looking topping here, I said I'll just wait for potentially the quality failed breakdown that I was looking for, that we're trying to get right now down here. So with that said, it was a short that I saw, because here, this level, even if we didn't touch this zone area exact, this was one bounce, because this one test of it that went from 392 all the way up to 416 without losing its low. So that's almost like 24 points. We bounced again from here, 393 up to 411. That's another 18-point bounce. And then once more we bounced exactly touching this level, back testing it, 390 to about 405. So 15 point, 18 point, 20 something point bounce. So I thought for sure if and when we got down this area, I would be able to short below this final bounce. And I'll put a red line there just so you can see what I mean. I would bounce like a couple points below. So this low is around here. I'd bounce about 1 or 2 points below. It's fine. It's up to you. The lower the riskier, but you can look at it both ways. But that short definitely worked out. I'm gonna delete that line for now, and you can see that we actually bounced, touched this minor level, and then closed right above this major zone. At which point, if you wanted to, you could have gone long, and that produced from about a 11-point bounce right there. So your long would have been right here at the close. Your stop loss would have been below this low, and you could have taken some profit right off the bounce. Again, that was like a nearly a 10-point bounce right here. So you could take it somewhere up here, get your 7-8 points, and just leave a runner. But if you didn't want to do that, we were given a failed breakdown, and also this green line right here was the trigger for that low that we had a couple weeks ago, but I'll get more into that in a second. Since we popped here, I'm going to go to a 5-minute just to show you, because I don't like to use 5 minutes except really for educational purposes. So this is a low right here, because an equality low, I'd say at that, because it produced a pretty good bounce. Like when you're looking for something to work with in terms of a volatility grab, aka a failed breakdown, you want it to be something that is like obvious, right? You don't want something that you're like trying to like, oh yeah, that looks, no, you want it to be clear low. So like if I look at that right there, this low is about 364 and we got up to 382. So that's about 18 points. 18 points is definitely a quality low. So what I was, once it went up here and sold off, what I'm looking for after my runner came off was I'm looking for this price here to reclaim this low. So this low is about 364-ish, and it's about 18-point bounce. I'm okay going above like 3 points above that low to go long and try a failed breakdown. Again, it's riskier though because we have a quality failed breakdown above potentially. So like you're taking a chance, but also you're taking a chance in that it might turn into a really like high one. So I think, for example, when the market opens Sunday, you might get a really nice gap open that just explodes, maybe 50, 60 pips potentially. But if you did take this, for example, you would have seen a lot of consolidation around that trigger, which is really good. You would have never lost the lowest low, so the trade never invalidated, and eventually you would have gone up a couple levels here. So 367 is your entry about, you would have gone up to almost 377. That is 11 points and a quality trade with a low amount of risk. Now, I have the trigger up here 5 points above because it was such a high low that we had. I'm going to show you that low real quick. This low right here produced in a massive failed breakdown. So for it to work, for this low to be reclaimed is going to take some time, and it's going to have to be a little bit like high. Like, you're not going to be able to just enter 2-3 points. You want to give it some space. So this is the entry for that failed breakdown of that low from a couple weeks ago. When the market opens, I do have a feeling it's going to blast through and not provide an opportunity. But at the very least, this failed breakdown over here worked. And if and when we reclaim this bull flag, that's also going to provide a pretty big reward. I don't care what it does after goes through. If it sells off, that's not my worry. My worry is just being positioned properly if the setup presents, and selling my portion of the trade that I want to profit, and then keeping a small position open in case a single becomes a home run. So yeah, that's just my first little video. I hope everyone liked it. Please leave comments and feedback if you can. I'm trying to get better at showing this, and I will. And happy trading, and have a good weekend.